Hey everybody, welcome back here. Nate here from Hummingbird Mortgages. And what's going on with the shit show that is Canadian mortgages and policies? Well, here we are here, the newest thing now from OFC, which is the regulator for mortgages in Canada. And this is just somewhat recently announced as it pertains to folks who want to buy investment rental income properties and how the mortgage qualifying works. I'm going to explain to you now. So let's take a step back here and talk a little bit about what we were able to previously do, at least. And again, this isn't all official. I'll get into that at the end. But so quite frankly, a lot of folks have used rental income properties as a way to build wealth, and a great way to build wealth. We've done it with several clients, done it with myself. And if you can imagine, there are, pensions are not what they used to be. CPPs not what it used to be. And a lot of folks can't really retire comfortably just on those things. So buying a rental investment property has been a great way to supplement income, to build wealth, to help with kids passing on wealth, to help to get your kids into the first home, all these sorts of things. So with that said, we've been able to previously do this. Let's use an example. Let's say, for example, that you want to buy a $500,000 property, or you want to put a $500,000 mortgage on an investment property, a house, a duplex, a condo, whatever it is, and you have $100,000 of income. Well, quite frankly, we're easily be able to go ahead and use your income to qualify to purchase and carry the mortgage. There we go. Now, of course, the rental income that we have from that, the folks that pay rent, that also helps to build up the income. So between your income that you make in your job and then the rent that they're paying, wow, it helps you to carry the property. And the lenders say, great, no problem. This particular borrower, their ratios are good. They can buy this investment property. Or another scenario which is common, which is great, is folks who they get into their first property, an introduction home. Let's say you buy a condo as your first property, or you're a young single couple, or you want to get into the market at your first time, or you buy like a smaller home. You don't need anything bigger. You don't have a family yet. And then you get to a point where, maybe you have a growing family, or you want to upgrade yourself. And you say, you know what? I don't want to sell my property. I'd rather just rent my home and then go and buy another home. And I can use the rent. What we were able to do is use the rent from your home as income to help you to qualify to buy the next home. Fantastic. Now, there's a proposal in place that could come into effect as soon as January, which now prevents us from being able to use your income to qualify for the second property or the next property. What does that mean? Well, it means this. Let's say you have a property, now you have your home, or you have a rental income property. We've used your job, your income to qualify you for that home. Now, when you go to buy an income or an investment property, we can no longer use your income. So your $100,000 that you make a year, we can't use that to qualify you for this property. We can only use the rent income from that property. And lenders only allow us to use about 50% of that anyway. So let's say that you're getting $2,000 a month rent. Well, we can only use $1,000 a month rent, so $12,000 a year as income to cover the mortgage and carry the property. Of course, that would never work. It's never going to work. You'll never be able to qualify for that mortgage. So the reality and the great benefit of being able to build wealth through real estate by buying a property or two and helping you to bolster your retirement fund would be gone if this goes through in January. So that's important information to know. We'll of course, we'll monitor it, keep you posted. Hopefully they don't. Hopefully they end up changing this policy, turning it around. What can you do, though, if you're thinking about buying a property? Well, if you are already thinking about buying an investment property, I would strongly encourage you to come in and get pre-approved now. Because if you can get pre-approved now, you need to act right away. You have enough time to be able to get pre-approved and get a rate hold, for example, so that if that policy comes into place, you've already been pre-approved. If you start shopping for a rental income property and you want to buy one, and you start in December, this process, you probably won't have enough time. So if it does come into effect in January. So what I would say is that if you are in the market for that, if you're thinking of buying a rental income property or another one, if you're a multi-investor, I would say get that ball rolling now. If you haven't already, give us a call, get you pre-approved right away. Whomever your preferred broker is, get a hold of them right away. It doesn't have to be us if it's not, but make sure you start that ball rolling right away. Okay, so that's what's happening right now. So everyone's aware of what's going on. Any questions, of course, reach out. Let me know. We're here for you. Nate@hummingbirdmortgages.ca. Email us, and I'll be happy to answer your questions myself and help you to, get to. If you want to get to a place where you can buy a property, great. If not, that's fine too. But just know these are the rules that are being proposed and implemented. All right. Have a great day. Bye now.